Hello, my name is Mo Stoltzman. I'm a manager with Actualize Consulting, and with me today is Keith Raymond from Financial Sciences, and we are here to talk about bank relationship management. On the agenda today, first we're going to talk about bank relationship management, the purpose and the goals, the challenges with bank relationship management, effective management of bank relationships, and the role of technology and advisory services.
Thanks, Maureen. My name is Keith Raymond. I'm Chief Revenue Officer here at Financial Sciences. I've got about 30 plus, I think I stopped counting at 30 years experience in Treasury. The first half of my career spent managing and starting up Treasury operations in pharmaceutical, financial services, and transportation. Then about 15 or so years ago, made the move over to technology and had an opportunity to work at a number of TMS vendors out there in the marketplace. So have an interesting perspective potentially because I've been kind of on both sides, both as a buyer and seller of technology, a user of technology, and certainly seen some of the pains that people go through, and excited to be here. So thank you.
And my name is Mo Stoltzman, and I have a long history in both corporate treasury and banking. And so I bring a dual perspective to this topic. And I look forward to getting into a deeper dive with you, Keith.
Awesome.
So with that, let's take it away.
Let's do it.
So let's talk about bank relationship management goals. And we've highlighted a few here, and we'll go through them individually. First, access to bank services, followed by effective risk management, mutually beneficial relationship, excellent customer service, fair and transparent pricing, access to latest technology and innovative solutions, and effective monitoring and measurement of your bank relationships.
You know, it was interesting, Maureen. When you and I first started talking about this, the list is long, right? It's long, it's very, very vast. There's just such a number of things, but I think this is just so foundational, right? It touches so many different areas, whether it's credit, access, just simple things like payments, but all of these different goals are relevant. Some are a little bit more important maybe to others. But this is certainly, at least at a top level, I think a great start for companies and people to start thinking about what your true goals are when you're trying to manage your banks. It's not just about accounts. It's not just about credit. It's not just about local geographic coverage. There's so many things ultimately that are part of this.
Yeah, there's a lot of considerations when you're thinking about your bank relationships to consider. And hopefully the audience will benefit from what we're going to talk about. So let's start with the access to bank services, if you want to talk about these items, Keith.
Yeah, so I think a lot of these things are maybe the more obvious, right? So credit, investments, payments, some of those things. So these are the things I think that people probably think about most when they think about bank relationships. I think what's super interesting, and we're going to cover this over a couple of slides, is the credit conversation super important when you need credit. But the payments the payments functionality or the ability to make payments, whether it be in specific currencies or geographies with the formats, are also equally important depending on who you are, what industry you're in, and kind of what's going on over there in the environment. Same thing with collection services as well. So I think that holistic approach, there's certainly not a one size fits all when it comes to access and what that means to you and what's important to you. But this is certainly a great start.
Yeah, as a frequent consumer of advisory and research data from banks, it is really, really helpful if you can get on some of the mailing lists for the research and things that they do, because a lot of that work would be extensive if you were to try and do it on your own. And so it's just really helpful to kind of get some, wider economic research and advisory on what's happening in the banking world. So I find that one to have been particularly helpful.
I think that's probably underserved, right? I think people don't necessarily talk about it as much either. I think particularly in Treasury and managing Treasury operations, whether it's domestic or global, you know what you know, but you don't know what you don't know, right? The unknown unknowns, as they talk about. So to be able to have the perspective, of another professional that's kind of, either looking over your shoulder a bit or just providing a view of the market that may be different from your own, is super, super helpful. And I think when, I've talked to, probably hundreds of treasury organizations and treasurers, and some of them are just like, no, we really just only have one or two banks or something, something along their footprint's pretty small. But you think of particularly on the advisory, all the other stuff, yeah, there's certainly benefits there. But on the advisory and the research front, opening that up to three, four different partners, even if you're not necessarily banking with all of them, to at least have that view of the market, which maybe differs from your own, whether it's for payments or investments or credit or what have you. But I think that's super important. I don't think that's actually talked about enough, actually.
I would agree. And I think a lot of companies don't realize that they can actually ask their bank to do some of this work for them, and they have it.
Yep.
And if you are in a specific industry, they can give you some deep industry research. And so I just don't think people realize that they can ask for this and that
Yep.
the banks are happy to supply it in most cases.
There's way more research than any one person could possibly read if you just ask,
Mhm.
right? That's just true.
Agreed. Okay, so next we're talking about effective risk management. And so really this is from the perspective of, we've seen in the news some bank failings and, we all remember what happened in 2008. So this risk management piece where you're basically actively monitoring the credit risk rating of your key bank partners, watching if there's any downgrades, um, you know, checking if they meet the standard for capital requirements. Do you have multiple relationships to cover your counterparty risk? And does your geographic footprint overlap with your banks? And so this is a key thing to consider, especially for, the capital requirements in other geographic areas. Do they subscribe to Basel III capital requirements? Where are they with, the typical bank regulations? And just making sure that, you assign the appropriate risk to all of your bank partners around the world.
No, I think it's super important. And the one, there's two pieces here that really interest me. The multiple relationships, because I've seen so many situations where, as I just mentioned, where maybe an organization doesn't have enough, but I've also seen situations where somebody has too many, right? From a credit risk management standpoint. I remember one organization, they're like, no, the most we can ever have with any one bank is $200 million, which of course meant that they've got to have 16 based on their capital structure. They needed 16 banks just to stay in compliance, which is the
Mhm.
other side of the problem, right? Because now they've gone kind of too far. So there's a way to right size that, I think. But the
Yeah.
answer certainly isn't one or two. I mean, I think, most people, and when people ask me what I do and, who my customers are and some of the problems, I basically try to talk about it from a personal perspective, right? As a mature adult, do you want to just have one bank? Maybe not, right? Do we just want to have one credit card? Maybe not. Why? Because things happen, right?
Mhm.
Whether it be fraud or credit or, something with the bank, right? So at least be able to have some sort of backup. I just think that's super important. And then the last piece here, the footprint, it's just super important, right? If you're a global organization that doesn't need storefronts, or you're not a retailer, a hospital, or bank or something like that, maybe it's not as important per se. But I've seen organizations that have way too many banks because their footprint, where they've got stores or banks or hotels that are just located all over, and you want to make sure that you've got a banking structure that matches that, so you can get local access to, whether it be deposit services or safe deposit or payments or what have you. So I think those two are just super important outside of the credit side.
Yeah. Yep. Agreed.
Yeah, so I'll take this one. So mutually beneficial relationship, right? So whether we're talking about, bank share of wallet, has your relationship ultimately been tested? Does your bank understand you? Do you understand what's important to your bank? How does your bank measure you as a customer? And do you spend time? I think, credit crisis back in 2008 when Silicon Valley Bank, had their issues a couple of years ago, all of these things, that idea of, hey, all right, now I've got a problem. Now I need access to credit. Now I need access to something. They've said they're going to be there for you, but will they? right? So I
Mhm.
think that has it been tested, and if it's been tested, what's the result been? I think for me is just super important, but also the bank share of wallet, right? Understanding, I think it doesn't matter what vendor, whether it's a bank, whether it's a supplier, what have you. To me, it's just that relationship must be mutually beneficial because everybody's got to have some skin in the game. So you've got to figure out, all right, I know you want to get the best rate from your banks and your suppliers and all that. Totally get it. But you've got to make sure they get paid. And if they're not getting paid what's appropriate and what they feel like is fair, then when it comes time for that relationship to be tested, will they be there?
And I think the time component is also just really crucial because I know everybody's really busy and they may not want to spend their afternoon, talking over
Yep.
banking items. And sometimes it can be that, maybe the banks, if you have a lot of them, it feels like you're in a never-ending cycle of trying to, manage bank meetings. And so you just need to really set some realistic, time that you can dedicate to each relationship and making sure that the important relationships, receive the most time and attention from you. But also just making sure if you have accounts with the bank that you are checking in with them routinely. And likewise, they're checking in with you to make sure that, all of your needs are met. So I think that part is really important as well. I think avoiding having the meetings is not really beneficial to the relationship.
It's interesting too, right? When I think back in my corporate treasury days, a lot of the accounting team really thought, hey, you're meeting with the banks, it's a boondoggle, right? Because yeah, certainly you're going to probably do something fun. Maybe you go play a little golf, maybe you have dinner or something like that. But that relationship that you have is just super important, and it's undervalued right up until the time when the CFO says, hey, by the way, we need to do X, Y, or Z. You better have that relationship, and it's just super important.
Absolutely. Okay, and on that same sort of note, excellent customer service. And so all of your teams that interact with the bank, the expectation for customer service should be, the same across the board. So you don't want one team really suffering because they're not happy with the service. You want to make sure that you're checking in with the teams that interface with the bank and, solicit feedback from them. And when you do get to those regular service reviews, you can provide that feedback and try and improve it. Another thing that you'd want to look out for is, do you have a dedicated service officer assigned? And then, that's generally something that, if you have an issue, if you have a question, you should have a dedicated officer that you can reach out to and ask those questions. The other thing is access to product experts. You may not have the luxury of having really deep product knowledge in your company, and you want some automation or you want some other sort of efficiency gain, but you need somebody at the bank who can really understand the product and how it will benefit you. So just having access to those product experts to be able to talk to, people internally and find the right services for you. And then implementation and project support is a huge thing because, anyone who's ever been on a project knows that this does take a lot of resource. And so you want to make sure that the bank has really good implementation and project support when you're implementing, a new product or service, and that they'll kind of guide you through that process. And then finally, are you able to get a human on the phone versus a chatbot? You want to make sure that you're getting particularly critical questions addressed. There's no frustration with the service component, even down to simple sort of admin challenges and access issues. You want to make sure that, the bank has a really good service model in place so that you're not losing, really critical time in some cases.
No, I think it's super important, and I think one of the things that you mentioned early on is really just spot on. When I think of how I've managed my banks and my banking structure, and then how I've managed the employees within the organization as well, you've got to provide regular feedback, right? You've got to keep track of what those interactions have been. Have they been positive? Have they been negative? Do you have specifics that you can point to? right? And then keeping track of that data, because a bit like employee reviews, if you do it just once a year, that's not, obviously it's not best practice, but it's pretty ill-advised, right? Because when your employee says, well, this is what you say, but give me an example. Can you give an example from 9 months ago? Right? If you haven't provided feedback, if somebody's not necessarily doing a good job, or even worse, if they're doing a great job, but they're not getting that positive reinforcement, your bank needs to hear that too. What are they doing right? What are they doing wrong? So that way, when you sit down maybe once a year at a bank review, that way yeah, you're getting the value. Is each person on your team being able to, are they able to actually get the information that they need when they need it? If you're decentralized, right, it's even harder, right? How do you get that data from somebody who's very, very decentralized, maybe in another time zone, in another country, somebody that maybe even don't talk to very much? And how do you get funnel that information up where you can actually organize it and communicate it in a way that's I guess not only just effective, but constructive as well. Whether no, this bank's doing a great job if they have a misstep, or no, they need to step up, whether it's price, whether it's service, what have you. And it's tough if you've got, we deal with companies, and I know you do as well, deal with companies all the time with 50, 60 banks, 1,000, 2,000, 10,000 bank accounts. And to be able to actually aggregate the data is hard, but be able to aggregate the feedback on that is just super, super hard. It just is. And I just think it's really, really important, again, if you want to build that mutually beneficial relationship.
Yes, I agree. And that's a good segue into our next slide here.
Yeah, so this is all right. So I'm going to admit there's a few shameless plugs. So Adam is the TMS that financial sciences provides. One of these screenshots here really is just a way that people can track performance in Adam. So I'm not going to go into too deeply into the details, but the idea is if you have an interaction with a bank, record it. Record it in one place. Record it in a place that can then with a place where you can aggregate that data and get it to somebody who's going to have that meeting, right? So the little screenshot on the right-hand side, are you using something that's really important to you? Maybe you have a problem, but it's not that important. Or maybe you actually have something that you're utilizing way more than you thought you did. And what's the cost of that to you? And then ultimately, what's the benefit for the bank? And is the bank going to say, yeah, you know what, maybe we're not that great at that, but you only give us 3% of your business or 5% of your business or what have you, or hey, we do it really, really cheap for you. So it's just having that data to ultimately have that conversation. Anyway, thank
I
you.
really like the look of this. And, I think that it's just an easy interface. And, the way I look at this as well is I've seen in so many cases where companies are paying for services that they don't actually use anymore. And they might be just getting like a monthly charge just to have the service. So you're not really getting the per item charge, but you're getting the monthly charge for the service. And so something like this can actually capture if, what, we actually haven't used that in, a long, long time. And then when it comes to, talking to your bank about the services you need, you can maybe knock a couple of them off the list because, as a company, you've moved on from those services. So
Yep.
I really like this way of approaching it. Now let's talk about fees and fair and transparent pricing. So obviously you want to ensure that service fees remain competitive. And, the best way to do that is to really compare across your bank partners and also just, check if the fees are increasing year over year. Are you still under your original contract? Or are you outside contract and, you're getting maybe some steady increases now? And this is a really tough one, but if you understand the bank service codes, it can certainly help, decipher the analysis statements that you're receiving. And even if you, still struggle with that, you can take the high level service and try and price the overall cost of, for example, ACH. So anything with the ACH service code, you can roll it up and understand maybe what you're paying overall for ACH. The other thing is willingness to negotiate. I mean, I'd be very surprised if a bank was unwilling to negotiate some sort of a discount, but obviously if you don't ask, you don't get. So you have to really you really have to ask and open that discussion. Like I mentioned, has your activity increased or decreased since it was last priced? Do you have additional accounts? Because if you do, then it's obviously more fee business, and maybe you can ask for additional discounts. Are you getting compensated for your balances through ECR or through automated sweep products? I do have in here just an understanding of the bank's metrics and how they price. I just included down there the calculation. This is the risk-adjusted return on capital that banks use. And this is sort of their overall method of modeling their customers. And they take the expected return minus the expected loss over the economic capital for the overall relationship. And so this is how they approach it. So I think it's important for customers to sort of understand that, if you don't have a lot of business with them, they're probably not going to give you, a large discount on fees. And then finally, if you're able to create processes that track variances and identify billing anomalies, because this does happen on a regular basis, and the bank may catch it, but really likely that they may not be aware of it themselves. And so if you're able to track variances, if it jumps, and you're able to track back to how and why it jumped, and trying to identify those billing anomalies so that you can raise them with the bank.
No, I think and a couple things that you said really point out. The service codes are hard, right? What Bank of America, what service codes they use is different from Wells, is different from JP Morgan, is different from everybody else, right? So to be able to have some sort of a system that can normalize, those codes is super helpful, because ultimately, exactly like you're saying, identifying anomalies is hard, because the 822s or the twist files, whether they're in PDF or electronic, they're super hard to go through, right? Without some sort of a methodology or system to go through them is really difficult. And the process is always really fascinating, particularly depending on which bank. And I won't call any out, but some of the banks that have kind of grown a little bit, maybe more so through mergers and acquisitions, where somebody goes through, and I see this all the time, and they start to say, well, all right, you've taken all these accounts, you've thrown them into this TMS, you've given me this great report that shows me all the accounts that they have and all the fees and everything, but these like 30 accounts aren't even mine. And this happens all the time. And it's like, no, that's why you go through this exercise, right? To be able to push back on the bank. And it's amazing how much, of ROI actually comes from, these projects that actually look to be able to capture the fee data, really being able to understand it. So that's one thing. And then the last thing I'll say here real quick is ECR. ECR in particular, right? So I think since the beginning of time, as far as I've seen, companies just say, oh, well, no, we just let the bank, pay a certain amount of fees for ECR. We don't really worry about it. We don't know what the rate is. But then you come to find out as when interest rates are real low, it's maybe not that big of a deal. But as interest rates have gone up, 4 or 5%, and you realize your bank's just paying you an ECR rate of maybe 1%, and if your bank fees are a couple $1 million, and depending on how much you've got coming through, you're leaving a lot of money on the table. And your bank isn't going to say, hey, by the way, we maybe want to look at this relationship. Not at all. They're never going to do that, right? But it's important. If you want that structure, if you want to pay through ECRs as an example, that's great, no problem. But at least know what that cost is, or that benefit of being able to do that. And I just think that's another area that's just a huge miss.
I agree. And that is a good segue to our next slide here.
This is shameless plug number 2. Yeah. So this, and this just really, this gives you the larger image here. This is what we call at Financial Sciences a cockpit, and this actually gives you a really good overview of everything that's going on within different areas of the system. And this in particular is bank fees. So it gives you an idea as to how many bank statements that you're getting in, what new charges that maybe came in on a particular statement, all the workflow that's associated with opening and closing bank accounts, has any price changes occurred, et cetera. And as I just mentioned, that the ECR analysis, being able to look at the banks and saying, all right, what rates are your various banks paying? Is it competitive? How much of your fees are getting absorbed by that? Are you better off just paying for fees just outright if that's ultimately an option? So again, to me, it all comes down to data, right? I think, whether it's and this outside of the conversation for today, but everything about Treasury has really just started to become really just about data. And now with systems and processes, it's just easier to get a hold of that data, which is great, but it's hard if you don't have some way to aggregate it and organize it and slice and dice it and be able to report on it.
Agreed. Okay, let's talk about technology. Okay, so this really obviously is something that companies want to pay close attention to, especially with them wanting to integrate with multiple internal platforms. And you want access to leading technology, obviously, and you want a bank that has innovative solutions that they bring to the table. So even at the basic level, you want reliable, easy to use bank platforms. That goes without saying. I mean, a lot of users still may be just going into the bank platform to do payments. And if this is not a great interface for them, they're really not going to be happy with that experience. So you just want to make sure that the bank platform is reliable and easy to use and won't cause confusion. The continuous investment in technology, I mean, this is something that banks we know are constantly investing in technology, but you want to make sure that, some of the smaller banks that you might partner with, that they're at least staying, in touch with the minimum expectation, what you might need for your internal systems to work. And then, of course, keeping up with XML standards. You want your bank to be an enabler of automation, right? Because you want to end manual processes and you want to, make things a lot easier so you can focus on other things. And then finally, obviously, critically is fraud prevention. You want to know how they approach this, and are they, a leader with the tools that they use for fraud prevention?
No, I think, and all spot on. And I think the enabler of automation, it seems like it should be obvious, but it's still surprising to me the number of banks that really can't produce files, right? It's not the JP Morgans, the Bank of America, right? It's the other, there's thousands of banks in the United States, right? A lot of small ones really have a hard time being able to produce files, which then makes it really difficult to be able to get a really good cash position, be able to make sure that you can actually have some sort of fraud prevention because you can actually see what's going on, right? You're getting that data, whether it's real time or pretty close to real time, to ultimately to hopefully be able to reduce, fraud, if not ultimately prevent it. But if somebody isn't able to get files in and out of a system pretty easily, pretty quickly, fraud could happen. The bad actor could be gone and on its way, and you'll never know until days or potentially weeks later.
Absolutely. Absolutely. And really, this is where your IT group really does have to have a seat at the table when you're, looking at new bank partners, making sure that, they have all the things that the IT department requires. So you got to make sure that they're included as a stakeholder.
Yeah, it's just so true, right? So, this comes up all the time, fraud. Well, I really can't put my hands around, I think from like an ROI perspective, and we're going to talk a little bit about this, but the whole idea of, well, there's a cost to that. I've got to get IT involved. I've got to get this. I've got to do this. It's like, yes, 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 you do. Because what's the cost if somebody wires out incorrectly $17 million, right? What was the cost of that? What could you have done to make sure that doesn't happen? What can you do to make sure that, yeah, your name and your company's name, your CFO's name isn't on the front cover of the Wall Street Journal? Really simple things. There's plenty of technology that's out there at various price points. But being able to actually, have that automation, to be able to have those controls, to be able to help you prevent fraud. Because there's people, as we all know, and everybody that's listening and watching this knows, people are spending their full-time job trying to figure out just how to get money from you in some sort of way that you'll, it's a bit like kids, right? I remember my kids years and years ago, by the time I figured out what technology they were using, they're already on to something else, right? So it's just, they're always, all these bad actors are going to keep way at least one step ahead of you.
Totally agree.
Yeah, so I'll take this one. So, effective monitoring and measurement of the relationship and process to me is super important. And you can see this process goes in a number of different areas, right? I mean, yeah, we could start at the cash position and monitoring the bank relationships, but this involves so many different processes and that are within Treasury, right? Whether it's, all right, we're figuring out what bank accounts we have, what's the cost of those bank accounts, What loans do we have outstanding? How are we keeping track of those loans? What's the quality of actually getting credit? Are you the investments that you're making through your bank, are they competitive? Same thing with, foreign exchange rates, interest rates, things like that. I think access is one thing, but then being able to measure, okay, yeah, I again, and I'm not picking on any one particular bank, but yeah, Bank of America maybe was better than JP Morgan, or this bank was better than that. Well, how much better? What did it cost? Right? What was the benefit of being able to go get an interest rate swap from one bank and versus another bank? Or hey, you know what? We did 500 foreign exchange deals last year, for as far as hedging some exposures. Okay, who was better? And how ultimately do you measure that? And then it's all the other stuff that goes into it too, right? Are you actually able to keep track of and monitor those signers, right? Because they're probably changing all the time, particularly if you're decentralized, right? You don't even necessarily see the various people coming and going in the organization if you're decentralized, right? You don't have any control over it. You don't have any visibility into it. But if those people are signers, it's a huge, huge problem, especially if you've got somebody who's disgruntled in another country that decides to leave. You don't really know what they're going to do, right? So, being able to have both the monitoring and then measuring of all of those things, whether it's service, pricing, the relationship, just I guess holistically, I think it's just super important, and it's hard to do because it touches so many different things.
Yeah, I agree. And it does look like a lot of different things to manage, but really they all fit together so well. And, there are tools that you can use to help you monitor, measure the relationships. And even for smaller businesses, it's simple things like the current list of authorized users and signers. I think that catches everybody out from small, medium to large. You have maybe somebody that left, 2 or 3 years ago. Maybe you have an acquisition and a couple of people were never removed, but they're no longer with the company. And so, you just really want to make sure that you don't have people that are no longer with your company out there still actually able to send in a signature against your bank account. It's really important that you get on top of things like that. And, with pricing, even if you have a single bank, I hope some of the considerations we mentioned earlier you'll take to heart, because even if you have a single provider, you do want to see if there's an increase in activity, maybe you can get an additional discount and things like that. So I just want to make sure we're not just talking to, large companies, but, some of this is helpful for smaller companies as well.
I think in some cases maybe it's a little more important, right? Because if you're a super small organization, maybe even $100 million, maybe even less than that, right? You don't have time. You don't have people, right? So how
Right.
do you manage, if you've got 50 bank accounts, how do you manage the signers when you're really just trying to get payments out on time, right? You're just trying to get a cash position done. You probably don't have technology. So some of those things that maybe are a little bit easier to do as a bigger organization, it's just that much harder to do. I mean, pricing as well, right? The impact of bank pricing on a smaller organization might be significantly larger as far as, true impact than a larger organization. So I think that's a great point.
Okay, let's move on to the challenges. So some of the challenges with bank relationships, we wanted to cover those as well. And some of them we've already touched upon, but here's, some of the ones that we wanted to focus on. Too many banks, too many accounts, counterparty concentration, global relationships definitely add complexity with, know your customer, FBAR, capabilities. Can they, do they have the same capabilities as the partners that you're used to working with in the US or the United Kingdom or wherever? Um, Acquisitions, when you acquire companies, you acquire all of their bank accounts. Are you getting consistent format? Are all your partners migrating to XML? Managing all the signers, this is often a manual exercise, lacks scalability, tax implications, bank fees, difficult to compare, especially across different geographies that might call products different things in different areas. Can be hard to understand, and it is difficult to measure the share of wallet. So of these, Keith, which ones would you think are some of the main issues?
I was actually just thinking as you're going through the list. I was thinking of each of the different projects that I have in our pipeline and all the customer, all the potential customers, all the prospects that we're talking to. And there's only one actually that doesn't have half of these things on the list. Oh, and honestly, that prospect actually is really just doing a debt project, right? Almost every single, because this is just so foundational, right? Everyone's got these problems to some extent or another. Maybe it's not too many banks, but probably too many accounts. But maybe it's the other
Mhm.
way around. The tax implications, right? I mean, we're dealing with companies all the time. They're like, yeah, well, we've got to figure out how to funnel money from one jurisdiction to another, to one country, and to a particular bank account. So all of those things come in, and then ultimately the fees on top of it. Um, it's so found it to me a bank relationship project. There's so much ROI that can come from it because most companies really haven't taken the time and the effort and spent the money to make sure they've got a really good handle on it. So such a big ROI can come from it. And to me, if you want to have good data, right? We'll talk a little bit about AI later. But if you want to have good data, you better make sure that it's right. Right. I mean, there's a lot of data that's out there and you get all that stuff, but if it isn't right and if it's not complete, then I don't know, can you really use advanced technologies to be able to help you make decisions? And I don't think so. I just think the bank relationship piece is just this huge foundation, whether it's yeah, interest rate risk management's important, cash management's important, all that, but if you don't actually get the bank relationship management structure correct and be able to map it out and get your signers correct and you're in compliance both at the federal level, whether it be FBAR and things like that, or at least within your own organization, I think everything else just ultimately is a mess. And we see it way, way too often where we just say, hey, just send us a list of your banks and bank accounts. And they're like, oh, this is going to take a lot of time. Like, what do you mean? Like this should be the basics of some of the things that we do. And I think, and I'm sure you've got tons of stories as well, right? You've got all sorts of projects that you're working on that are very, very similar.
Yeah, for me, my personal experience, acquisitions is probably one of the major challenges. Oftentimes, the due diligence that happens before an acquisition is so critical in understanding just how many bank relationships and accounts are you taking on, and have they been has everything been included? And what I've seen is some companies that are really in acquisition mode, they keep, in that they're acquiring multiple companies per year. And then what happens is it just snowballs, right? Because you have more and more bank accounts to try and manage, and it just becomes really unwieldy over time. Especially if are acquiring a company similar to your own, you might inherit 200 new accounts, 400 new accounts. And this is something that you're now having to manage and roll into your existing bank relationship management exercise. So that one sticks out for me. And then just the too many banks, too many accounts. We've all seen this, especially in Asia and other areas around the world where they make you open an account for one specific thing,
Yep.
and and you really don't have a choice. It's something either that the government makes you do, or for some other reason, but you do acquire a lot of accounts that way, and they are hard to get rid of. They take a long time to close, and oftentimes they'll linger for a long time.
One of my favorites is when you go out, you're talking to a new company, you're building a relationship, trying to understand what their banking structure looks like, and you're going through, you're like, okay, well, you've got one bank at this one bank account at this particular bank, doesn't really fit. And they're like, oh yeah, we can't touch that. Well, why not? Well, because the CEO of that division that we acquired, that was like his brother, uncles, or whatever. I'm like, oh, but then you learn actually that person's left. And so has the other relationship on the other side. So now they don't touch it, but they don't know why. So that's one that I see quite often. Or the other one is we can't touch that account, but we can't tell you why because something might flow through it at some point, and we don't want to create a problem. So it's just that, and that's exactly what you're talking about acquisition, right? if you can't, process is so important. If you can't get it right initially, when you acquire, you're almost exponentially um, ruining or exponentially making the whole process and the structure much more difficult from both like a cost and a control, all of those. I just think it's so right. It's so important just to get it right and keep it right because again, the impact is just far reaching and it's way worse when you have M&A.
Yes, and I'm guessing there are people listening to us right now saying, "Yeah, you're you're preaching to the choir."
Somebody might be upset I used their story, so
Right, right. So we can sympathize. Okay, let's talk about effective management of bank relationships.
awesome. So I'll take this one. So, I think we talked about this really early on, and I think it's, striking the right balance is correct, right? It's, you need to reward the good things that your bank does, right? Yeah, you need to streamline the process. You need to make sure that the technologies are better. You need to make sure that you're getting the right service. You need to make sure that the fees are correct. But I think from the bank, we don't always beat up on the bank either, right? We really want to make sure that the bank is ultimately getting rewarded, whether it be from a credit perspective, whether it be from a cash management perspective, right? There's plenty of different ways that banks can ultimately get to be able to get rewarded. And the thing is they have to know you, they have to know your business, and you've got to understand them and what's ultimately important for them. And again, it all comes down to me. I think we've used these terms strategic relationship, right? Mutually beneficial relationship. It can't always be, hey, you know what, I've got to get every dime out of my bank. Because as soon as there's a problem, just like we talked about, when that relationship gets tested, as soon as there's a problem, you'll be the first ones to go.
Exactly, I agree. And the banks, they obviously like the so-called sticky business. They like
We
recurring
all
fee
do.
business. Yes,
Right?
yes.
It's
I
no
mean,
different, right? That's the thing.
right. And so, if you don't have that sticky business with them, they probably are going to approach the relationship a little bit differently. So you have to take that into consideration. Look at the overall picture and, who's your main operating bank? Do you split payments and receivables with another bank? Sometimes you can spread the business out a little bit that way. And then you've got two partners that you can really leverage because they both have a part of the business that they would consider sticky.
Yep.
And you can kind of go from there. And I think, yeah, this is really about finding the right balance, what works for you and it is not too onerous, and what works for your bank. And, both should feel satisfied about the relationship and feel like they're getting something out of it.
Awesome. So I promise this is the last shameless plug. So how do you keep track of all this, right? How do you keep track of all the different things that we've talked about? Your fees, your relationships, your meetings, your opening and closing bank accounts. And that's really ultimately what the graphics on the screen talk about is really providing what we call a center of excellence. And that is a way for you to basically have an internal SLA with both your department as well as the individual businesses and geographies, et cetera. Because again, you're trying to keep that control in most cases, at the home office, at corporate. How do you make sure that if you've got 2,000 different retail locations, how do you make sure that, yeah, each individual store or each individual hospital or hotel, that they're getting the proper, that they're getting the proper service, not just from the bank, but really from you as well, right? And how do you do that if you've got 2,000 accounts, right? You've got all these signature cards that are going back and forth. You've got all these, you're opening and closing bank accounts, you've got all these bank fee files, all of that. And it's just, there's a lot of moving parts. And to be able to track it and document it and create workflow from it, I just think it's super important because one thing, particularly when it comes to bank relationship management that I've found is if there's 10 steps in a process, the first nine are probably the most important, but the 10th one is maybe the one that just kind of closes it all out. But there's not a lot of value add in some of this stuff, right? But you've got to do it and you've got to do it properly. And if you don't, there's a problem. So making sure and being able to look at yourself and be able to say, yeah, we've actually followed the process all the way through, and this is where all these different tasks are. So in some cases, all right, and I think you mentioned this. Yeah, we tried closing a bank account in 2022, but I don't know, is it closed? Like, if your CFO says that or your controller asks you that, it's pretty embarrassing if you don't know the answer. And it doesn't have to be that way.
Right, I agree. And FBAR is another one that really catches people because, there is a push oftentimes for central treasury to be a main signer across, the world. And people don't realize, and then, they are now responsible to file an FBAR report.
Yep.
And just tracking that to make it easy for the people that are signing, so they're not running afoul of any of these regulatory requirements. And I think there's like sort of a critical mass. Like if you have a lot of bank relationships and a lot of bank accounts around the world, I think really you want to look for some, technology to help you manage all of that because although it can be done in a low tech fashion, I think you're going to be spending a lot of hours doing it. And there are a lot of enablers that can help this process and automate this process for you, whether you use something like this or use your TMS provider.
Yeah,
There
no,
are certainly applications. Yeah.
no, it's so true, and you're exactly correct, right? How do you keep track of maximum balances in an account that you barely see, but that you're a signer on, right? So all of a sudden you're being asked to do this, right? You're not being asked actually, you're required to do this, and you're personally liable if you don't actually file the forms and all that. So again, if you don't have access to that technology, Excel can in most cases get pretty overwhelmed pretty quickly, and how you track some of the balances and signers and oh and I'm a treasurer on my title is treasurer on this account, but I'm actually a secretary on this account, right? And and just then it's exponential, right? So it just the problem really can grow pretty considerably.
Absolutely. Okay, and now we'll talk about the role of technology and advisory services. Do you want to talk about ROI, Keith?
Yeah, so this to me, I hear this just like all the time. All right, I know being able to have a bank relationship management solution is important, but it's what's it gonna cost? And I think there's the hard dollar, yes. There's a cost to having solutions, whether it be a TMS or what have you. But there's a lot of benefits, right? The reduction in bank fees, in my experience, pays mostly for at least the first year of Treasury technology to be able to do that. But what are the soft things, right? It's all right, you don't do this, but then you have some sort of fraud, right? Because you've got too many signers and you don't really know who they are. And maybe they're in other countries, maybe they're right next door to you, right? Maybe they're in the next office. That maybe it's a controller that now is in another role. You just don't know, right? So what is the value of, again, just like we talked about earlier, of not having your CFO's picture in the Wall Street Journal, not having some sort of traumatic event that your CFO and your CEO have to answer for, on an earnings call. And ultimately it boils down to that last point. What's the cost of avoiding fraud? Right? Because there's all these other things that go on. You want to get the best rates for foreign exchange, you want to get the best rates for cash investments. You don't want to pay, $4,000 a month for a bank account, right? You want the best rates, the best all that. But ultimately, it comes down to this is an area of weakness for every organization, and it all comes down to fraud. And regardless of how much something costs, the cost to fix a problem before it happens is always going to be way cheaper than afterwards.
Totally agree. And I think a lot more of this is actually going to be driven by board questions. How are we managing fraud? How are we managing our counterparty risk? How are we managing, our bank signers? And, there are questions being asked because it's in the news all the time now.
Yep.
And, you want to be prepared to sort of say that, yes, we have a plan for that, or yes, we're doing this, and make sure that you're able to address that fear.
Yep.
Okay. And what about AI, Keith?
So, being in the technology space, we get questions about AI all the time. There's so many interesting aspects to it, but I think one of the things that we talked about early on as well was about data, Now there is just so much data that's available. But what are you going to do with it? Right? Is it accurate and is it complete? Right? I think because even if you have very accurate data, if it's not complete, does that really give you the full picture of ultimately what you need? I think too many organizations I see, I love AI. I love AI, whether it be generative algorithms, what have you. I use it. I use it all the time. ChatGPT as well. I realize that's generative AI, but certainly love it. Absolutely. But the thing is there are so many tools that are out there and that have been out there for a really, really long time that companies that I see that they just don't use. Descriptive statistics is just a huge one, right? Being able to just look at, let's just say for payment fraud, just being able to look and say, okay, out of this particular account, usually the we pay, I don't know, $500 out of this account for a particular payment. All of a sudden now we're issuing checks for $3,000 four times a week, right? Just being able to use some very, very simple standard deviation, mean, variance, statistics that have been around for, I don't know, 100 years at least, and being able to leverage that data, as long as you've got good data quality, I just think leveraging some of the stuff that's out there is a great first step. Data quality, garbage in and out. We talked about fraud, the policies and procedures, right? AI, again, love AI, but again, what data gets in there? How is it ultimately used? Are you using the right models that are actually being able to produce the right result? Too many organizations that I've seen think, all right, I'm just going to take AI, run it against a data set, and it's going to give me exactly what I want. But you got to make sure the look back period is correct. You got to make sure the model lines up, right? Again, all of these things really go together, and it's a combination of workflow, policies, making sure you're continuing to update that data, and then the security aspect, right? So again, you've got all this data, and data is super important, and there's tons of organizations out there, and we all know who they are. And the only thing that they do is make money off of data, whether it's your data or somebody else's data. That's their business model, right? So being able to make sure that you secure all that in a way to make sure that somebody else isn't actually using AI or all sorts of bad actor tools, let's just say, to be able to access your data. And you can only imagine the things that they can do with it if they do. And I just think that security piece is probably not really talked about enough, because it's great to get all that data and put it all in one spot, but you should better make sure that it's certainly secure.
That's really good advice. Okay, I think now we're just really shameless plugging now at the end here.
I've been very good at that so far. So,
um, so as I said at the top, I work with Actualize Consulting, and consultants can really lift the burden on small teams when it comes to looking at rationalizing your bank structure, implementing new services, issuing an RFP, and designing and rolling out management reporting and KPIs. So, that's what a consultant can step in and help with. And so I'll leave it at that.
Maureen, real quick on that one, I think one of the things I think of when I see organizations looking at treasury technology, one of the things that I don't think they do enough of is to say, okay, yeah, we're going to implement treasury technology, but let's actually have a holistic view, a review of what our banking structure is. It's that bank rationalization, the bank account rationalization, because it's great to actually take all that stuff and put it all in a system. Love it. Big fan, obviously. But if you're just putting in a bunch of accounts that probably shouldn't even be there, or the bank structure really isn't correct, there's professional organizations like yours that just do just a tremendous job to be able to come in and be able to look at that and be able to say, no, you know what, you've actually got a hole here, whether it's geographically or with credit, or you've got too much overlap here, or hey, why do you have all these accounts? I just think that is super important, because the technology piece, I love it, but there's other work that needs to be done besides just taking all the existing spaghetti and kind of throwing it into a system in a lot of cases.
Yeah, and I'll say some of these engagements are very short, and so it might take a couple weeks to consume and give back some really important actionable advice on bank rationalization, for example. Implementation, I mean, it is really, really time consuming from opening the accounts, the KYC process, to all of the connectivity. It just, these teams are usually really, really small and have really full day jobs. And so it is really lifting the burden on these small teams to reach out and get some external help to come in and do some of that work for you.
Awesome. Great. And my last one here, I think, you know, and I've probably I've hammered these home probably a little too much, but you know, capturing that data, making sure that it's complete, accurate, and all in one spot. You know, ensuring compliance. There are way too many things from a compliance standpoint that can go wrong during the Treasury Department's day, whether it be security, audit, policies, documents coming all over the place, payments coming in and out. Ensuring that you've got a good audit trail of what's going on and what's happened, because someone is going to question you at some point. It might be totally fine, but you are going to get questions at some point. And it's way better to have some sort of a process around that to ensure that you've got a good answer. You know, I think from a services perspective, we've talked about that quite a bit. Just making sure that, you know, that there is, you know, like the last point there is a mutually beneficial relationship, right? That you're compensating your banks fairly. You're making sure that your company is paying with what it should, and it's getting the correct service and the correct quality. Whether that's through the TMS specific functionality, or just having a conversation that you actually have a lot of data to go back to your bank with, and make sure that it's a good, honest conversation that you can provide constructive, whether it be, you know, congratulations and thanks, or criticism, because, you know, they're both, you know, both things that you're going to end up doing at some point.
I agree. And with that, I mean, I just wanted to thank everybody for listening to our webinar. And I hope that you took something valuable from the conversation. You know, whether you're a small company, medium company, or large company, I think there's something that you could take away from this that you might be able to implement in your company. And that was really our intent. Not that you would take, you know, everything on board, but that, you know, maybe certain pieces are manageable and you could at least, you know, get a plan in place to get toward more effective management and monitoring of your bank relationships.
And hopefully everyone enjoyed, hopefully a little bit of humor along the way as well. Maureen, I enjoyed it. Thanks so much. I enjoyed the time.
Me too, Keith. Thank you.
Thank you.